Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. The recent April to date base pattern is not so clear here as it is in Kansas City or even Minneapolis, but it's still there. I'll discuss this shortly, but first I will outline the recent market. Okay, so the peak in mid-May was not the key to the recent move lower. No. Instead, it was the combined big key reversal down and bearish engulfing pattern that finally put pay to the moves higher in this market, happening a week after the peak in mid-May. I suppose the most surprising thing, actually I suppose it isn't that surprising, but what on the face of it seems surprising is how a lesser recent 61.8% Fibonacci line at 389.50 proved to be the low for that week. Now 3 weeks ago that support gave way, but it also only saw the market move down to what appeared to be a stronger combination of supports. They were the rising short medium moving average currently at 385.5, the 50% Fibonacci line of the March to May move at 374.75. This was just the tip of some further support below. Now, this support was the rising medium moving average currently at 350.25 and the 50% Fibonacci line for the whole of 2022 at 348 even. This was where I cautioned last week that what I had seen in the other grain markets would lead to a readjustment of the recent scenario. You see, since mid-April, we have, as in other grain markets, seen a head and shoulders pattern. Now, head and shoulders patterns are typically seen as bearish reversal patterns as head and shoulders tops, such as the one that is building up here. But not always. Sometimes they are bullish continuation patterns. I ought to let you know, just in case, this one here is not a perfect example of a head and shoulders top, but it's a genuine example of one. For starters, the left shoulder is weak and the right shoulder has not formed properly, but, and it is an important but, as I was composing my commentary last week, I noticed that this market had made a combined key reversal down and bearish engulfing pattern that would greatly help the cause of a head and shoulders top. I was sufficiently prompted last week by the same pattern on the other grain markets. I decided to place two targets here on the downside. Target X is the primary target, as in the 336 even area, and a secondary target, and harder to get, target X1 is in the 299 even area. Well, last Tuesday the market broke down through the combination of the neckline, which is currently at 376.75, and the recent 50% Fibonacci line at 374.75. The move continued lower, such that by yesterday prices had gapped and punched lower down through the rising medium moving average, currently 355 even, and we're testing 50% Fibonacci lines for 2022 at 348 even. This move lower has gone a considerable way towards the targets for the head and shoulders top pattern, but there are still obstacles in the way beyond the 50% Fibonacci line at 348 even, though there aren't that many. We have lesser Fibonacci lines at 343.75, 337.75, 333.75 and 327 even, but it will be the March lows between 311.75 and 315.75 that seem the most significant. Finally, much as in the other grain markets, there is the opportunity for the mid-May to date action to be seen as a bear flag type action, possibly even a bear pennant, a bear flag. If we do look at the action as such a pattern, then we will have a potential target X2 in the 330 even area as another possible target on the downside. London UK feed wheat. I've made the point here each week of saying that there was a lot less to go on here compared to some of the other grain markets. However, even with the limited information we have here, the March to date pattern is still visible as a little disjointed, if a little disjointed here. Just to recap some of the recent actions, the peak in late March was the start of the last major completed pattern here. We had a late March to late April ascending wedge pattern. This pattern was not the best ascending wedge pattern I've ever seen. Even that still looks a bit, well, ropey, but it is a true pattern. And it reached not only its primary target, but also the harder to achieve secondary target. What became very interesting was what the market did immediately after reaching that secondary target. So, let me describe the situation. Okay, so, for all the bullish energy spent, the market suddenly turned a shade bearish, coming ever so close to make it into a weekly key reversal down. The conditions were set to close the business 5 weeks ago, and all it needed to make it happen was a close 5 Fridays ago at or under 335. That was all that was needed. Well, we closed at 336.5, shade away from the fully bearish, but enough to prove two things. Firstly, there is some serious technical analysis action going on in this market, and players involved as well. And secondly, to give this market the shadow of potentially lower prices in the following week. True to form, prices dropped every day until 2 weeks ago, when they were rejected back upwards by the lesser Fibonacci line at 287.55 and 285.70, as well as the nearby 50% Fibonacci line for 2022 at 283.70, with the rising medium moving average currently at 292 even backing up as further support. Questions here are the same as in the other grain markets. Firstly, is this a pullback or the beginning of a bearish phase? And secondly, how far will the drop fall? Well, the answer to the first question was then yes, it was a pullback, but I cautioned last week to keep a wary eye on it. The answer to the second question became clearer as we entered this week. You see, I pointed out last week that we had a potential new pattern in the offing, one that has been evident in all the other grain contracts to a greater or lesser degree. Is to look at the mid-March to date action as a very big head and shoulders top. Now, this is by no means a good head and shoulders pattern. For starters, the left shoulder is small, and the right shoulder, well, could use some bulking up. But it will do. Yet the pattern is there, and last week I spoke of prospective targets below for the pattern. We have a primary target X in the 252.25 area, and a secondary target X1 in the 217 even area. Start of this week, the market triggered the pattern, punching below all three major nearby supports. It's the rising medium moving average, currently 292 even, the neckline, most importantly, 286.60, and the 50% Fibonacci line for 2022. Today, the market dropped down and closed below the next significant support. That's the 50% Fibonacci line of the July 21 to May 22 move at 262.5. We now have below target X in the 252.25 area, just about where the rising long moving average, currently 252.35, is currently located. It's going to be fun. It'll be interesting to see what happens there. Finally, much as in the other grains, I've observed the possible bearish halfway hesitation from the May high to date. It makes up the second shoulder of the head and shoulders top and is a really bad example of one here, but I'm using knowledge from other grain markets to visualize it. Thus, we have a potential target X2 in the 242 even area. It's a possible target for this pattern. I'll be interested to see if the market makes it that far, as it's just below the 50% Fibonacci line of September 19 to May 22 move at 245.10. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. And here comes the final bit.